do we call them sugar companies or do we call them ethanol companies? Or in case of Triveni Engineering, do we call it a multi-business conglomerate of sorts? Simply because they have presence across various verticals, and from the looks of things, from how I've seen the quarterly results in the last 2 or 3 quarters at least, almost everything seems to be firing at the same time. It's not usual that such a thing happens. But let's get in, Tarun, Sawhney, really to talk about the industry at large, not as much about what Triveni Engineering will do, but by virtue of their presence across sugar, ethanol, as well as the engineering vertical, it'll be lovely to understand from Tarun, how is the space shaping up? Tarun, great having you. Hope all is safe.
Neeraj, lovely to be back on your show.
Thank you so much. It's great having you. Tarun, let's. The show is called Talking Point, and the talking point certainly has been the last few days. What the Transport Minister, Mr. Gadkari, had to say about the quantum of ethanol consumption. Now, even if that seems like even if that is a hyperbolistic statement to some, the fact remains that India is squarely focused on making ethanol as a principal energy and a fuel driver of sorts. Now, this story is not new, Tarun. Just tell us, have there been more facets added to this whole ethanol story in the last 12 months to 24 months?
Right. Yes, Neeraj, of course they have. And let's start off with the Honorable Minister's comments just a few days ago. And there are two ways of looking at it. Firstly, you can look at the signaling and direction. And the second aspect are the hard numbers. And in both cases, Minister Gadkari makes very important points. As far as India's energy sector is concerned, ethanol will play an ever-increasingly important role in that roadmap. The Honorable Prime Minister has already mandated 20% blending by 2025. We are well on our way. If we look at the data that's come out for the last 3 months, we've had, the ethanol year starts in December, that we must remember that. So for the first 3 months of the ethanol year, we've had 9.5 or almost 9.5% ethanol blending across the country. The mandated amount was 11. In certain states, it was 10%. In certain states, we've actually crossed that 10% number, and we've had almost 11% ethanol blending. Now, this augurs very, very well for the short-term program of ethanol blending for this year. Looking forward, and as Minister Gadkari pointed out, the landscape is wide open. There is participation required not just from sugar companies that will potentially be contributing 60-65% of the total ethanol mix, but also from the grain-based sector. So you're seeing huge amounts of investments that are coming into non-sugar producing states, typically, where there are plants being set up to produce ethanol from grain. And now that will play a exceedingly important role, because we must remember that fuel has to be transported to all 4 corners of the nation. Sugarcane is only grown in select states across the country, and therefore the transportation costs, which are substantial, are things that have to be contemplated about, etc. So we're going to see ethanol investments come up, grain-based investments come up in other parts of the country, and this is very good. It augurs for a robust system that isn't contingent and isn't dependent on just sugarcane as a resource. So it's a multi-product stream that is coming out for one output product, namely ethanol.
Yeah.
As we look forward, I think the time is very exciting. Mr. Gadkari was very clear that he is looking at the minutiae as well of implementation. So you're looking at ethanol petrol pumps. 3 of them have already been inaugurated, as you know, across the nation. You're looking at that coming up. You're looking at flex fuel technology in cars. The mandated rollout of that, the discussion on physical months when we will see action, is extremely encouraging, because blending ethanol is one thing. Having the vehicles that can consume that ethanol at higher rates of ethanol blending is a second and equally important question. When both systems, when both tracks are moving swiftly, we can then say that there is great hope that the 20% blending target can be a reality in that time frame. And we're seeing that, Neeraj.
Well, so I was just thinking about it, Tarun. One more question on ethanol. I don't want to make it only an ethanol conversation, even though it is front and center. But one more question. If like I said, I mean, it seemed a bit stretched, 4,000 crore liters, to be very honest. But let's assume if we even reach half of that, that is well beyond 20% blending per se. My question is, because it is a government-facing initiative, till now, I've seen most companies, whether it's sugar companies or the pure play ethanol plant setting companies, excited but measured. They are not, they've not gone ballistic. My question is, do you reckon at some point of time, you with your such high ethanol capacities which are already present and in the stage of setup or completion, do you reckon you'll be enthused to do more on the ethanol side from what is projected thus far by you?
Neeraj, excellent question. Let me cover the data points and then I'm going to address the strategic part of your question. This year, the LOI quantities were 416 crore liters. We're well on our way in terms of achieving it. For us to get 20% ethanol blending, we're looking at approximately 1,100 crore liters by 2025. Okay. Now, as I mentioned, a larger portion comes from sugarcane and sugarcane juice, molasses, etc., and then a smaller portion comes from grain. We're well on track for that to happen because there are investments happening concurrently on both sides. You're right. There needs to be greater fervor. There needs to be accelerated investment simply because to set up a plant takes 18 months today, minimum. That includes expedited pollution clearance, which is happening from the government of India. It also means that you need to get your various other clearances, financial clearances, etc., in place so that you can execute. Today, in an inflationary world, we're seeing metal prices go through the roof. So you're having some issues on the supply side also, in terms of getting the plant and equipment on the ground. And those things, of course, there are some bottlenecks that exist at this point. I don't anticipate that that's going to continue for a very long time, because if there is demand, you will have people investing in those businesses quite clearly and creating that headroom so that you don't have these bottlenecks. And plus the massive variances that we've seen in metal prices and base metals, etc., is because of geopolitical factors. I don't see that as being, I won't comment on it now, but I don't see that continuing all the way up to 2025, etc., which is the time span that we're looking at. But you're right in your assessment that we do need more enthusiasm on both sides. We need larger grain facilities. At this point in time, we're seeing very small grain-based plants that are coming up, small to medium size. We need the ultra large size plants, 500 KLPD, those kinds of sizes that need to come about. On the grain side, on the sugar, molasses and sugarcane side, we need to see a greater number of large distilleries coming up that process juice. So again, 300, 400, 500 KLPD, kiloliters per day production capacity plants that can take large quantums of juice and process them into ethanol. That is on the horizon. It certainly is. And the messaging that we see from the central government, the enthusiasm, etc., goes a long part in terms of pushing entrepreneurs into this field. Certainly for us as well. We have a juice and grain combined plant. It's a dual feed plant that will be commissioned next week in Uttar Pradesh. It's a brand new facility, 160 KLPD facility that is going to be commissioned next week. And the interesting thing, Neeraj, is others will follow suit as well, very, very closely. This plant will be able to process juice during the season. As you know, the sugar season is 6 months of the year. Now, in the balance 6 months of the year, what is the feedstock? The feedstock will be grain. So we will be using multiple feedstocks to get the same output of ethanol. And that's very exciting because it means that over the longer term period, there is greater confidence that the supply will be met despite any vagaries that can happen in terms of input costs. And that is the real answer to the supply side issues going forward.
Okay. So you do reckon that you would be enthused to actually draw up further expansion plans once your capacities are on stream?
I think there is, I would be pushed if I did not say that, yes, we would be enthused, we would look at other initiatives within this sector. At this particular point, we have certain capexes in place, but to look beyond that, things that we've not announced. I think we could certainly be looking at it very closely in the immediate future.
Tarun, just one last question. Combining sugar and ethanol. Somebody that I was speaking today before yesterday, one of your peers said that for setting up an ethanol capacity, they would look to set up a capacity which will be a sugar crushing facility first, and on the back of that, having an ethanol capacity. My question is, would you look to do a combo of sugar and ethanol, or would you look to set up a pure play distillery, standalone distillery? I mean.
So that is more of a technical question of where you're setting it up. If there is substantial cane availability, you can set up additional processing capability that is directly for sugarcane juice.
Okay.
Which goes straight into ethanol. You lose out the optionality then of either producing sugar or ethanol. Now, what you're talking about is the Brazilian model. We will see isolated cases of this happening. Now, a lot of it depends on which state, because as you know, we have a centrally announced sugarcane price, but there are certain states that have a state-advised price. So it really depends on where that entrepreneurial activity will happen, and it will be conditioned on input costs. Having said that, for Triveni, we will certainly be looking at debottlenecking our existing plants, sugar plants, and that possibility exists for the majority of the industry. We have not seen massive investment within sugar since, I would say, the 2004 to 2008 period. So quite a long time ago. I think we're on the anvil of seeing at least, maybe not new production facilities or a large spate of production facilities, because you don't have the quantum of cane, right, that is available, but you will see debottlenecking happening. We're already seeing massive increases in total sugar output. As you know, if we look at the sugar balance sheet, there are massive increases that we're seeing. Let me give you an idea of what I'm talking about. This year, after 3.2 million tons of diversion of sugar towards ethanol, the nation is still going to produce, this is the Triveni estimate, 33.8 million metric tons of sugar. That's huge. We've never produced this quantum, including what has been diverted ever in our history. And frankly speaking, this has come on the back of inclement weather that has happened over the last 6 months, at least across North India. The weather in South and Central India has actually been pretty good, and the rainfall has been pretty good. In India, we've had in North India, we've had a lot of inclement weather. So it has had an impact on the yields. It has had an impact a little bit on recoveries as well. But when you go forward, you're looking at a lot of interest into better, higher yielding varieties, okay, with more sugar content, more yield, etc. All of this will lead to greater production. And the beauty of the ethanol program is that it exists to absorb that additional cane that's going to be produced in our farms. So everybody wins as a result of this.
Got it.
That is the real beauty of the ethanol message.
Okay, one quick follow-up on sugar. And a lot of analysts believe that having penciled in each company's earnings on the ethanol side by virtue of the capacities that are currently there or come on stream, etc., they believe, and because the rate is fixed, they believe the delta this year or FY23, they believe the delta for sugar earnings will come, or sugar company earnings will come from sugar, simply because the prices, as is the case with a lot of other commodities, are inching higher, and therefore that is not being factored in as yet by the market. Would you concur? I mean, I'm not asking you to comment on whether the market is factoring that or no in terms of a stock price, but do you reckon that the average selling price of sugar could be higher in FY23 versus what the average price would have been in the last 12 months?
Well, I can see the merits in that argument. Let's look at it from the domestic and the international perspective. This is because India is no longer an island. We are very much central to the global sugar ecosystem. Central. Our exports, if India stopped exporting sugar, global prices would go through the roof. The world needs India's sugar, Neeraj. So, if we look at it from a global perspective, where we're seeing recent articles where there's greater diversion of sugar cane towards ethanol in Brazil, the world's largest exporter of sugar. And therefore, it is fair to say that there will be lower quantities of sugar exported by Brazil. nations like India have to fulfill that gap. And we, of course, given our geographical location and geographical advantage that we have being in the northern and eastern hemisphere, we're close to many markets that are sugar hungry. So that gives us a tactical advantage that we've taken that we have really capitalized on, especially over this export campaign. Now, looking at it domestically, Neeraj, domestic prices have remained broadly flat because we've got a reasonable amount of sugar in the country. But as we close out the year with 8 million tons, that again is a Triveni number, 8 million tons being exported out of our nation, we're going to look at a closing balance of under 7 million tons, maybe 6.8 million tons of sugar. Now that is a very key number. To me, that 7 million metric ton closing balance is the benchmark number. If we're lower than that, then we will certainly see the tendency of sugar prices rising. We're in a healthy environment where we will see gradual increases in sugar prices. So it appears to be a distinct possibility.
Okay. And no conversation with your company and you is over without talking about not just sugar and ethanol, but also the other business, right? And fill us in. I know we'll talk exact numbers post the quarterly results are out, Tarun, but what about the engineering business and how is it shaping up? Because I see fairly mixed commentaries from companies, but largely positive. And brokerage after brokerage is saying that companies are getting orders of the kind that they had never gotten in terms of either the skill set or in terms of the size as well. Tell us a bit about your experience.
So, our engineering business has again, in the same spirit and light, we've seen tremendous growth over the 9 months of this fiscal year. Both in both verticals, we have two engineering verticals in Triveni Engineering, which is our power transmission business as well as our water business. Both businesses have seen a post-COVID resurgence. We've seen in the power transmission business, we've seen a massive growth domestically and internationally, which is very encouraging because you see longevity of orders. So we see that even when we go into the next fiscal year, because there's a breadth of orders coming in nationally and internationally, you can see that there is sustainable growth to that ecosystem, and certainly for our business, and that's hugely positive. Within the water space, again, because the majority of the work that we do is with government contracts, state, municipal, central government contracts, there had been a little bit of hiatus because of COVID, both in terms of execution or the order of award of new contracts, and also in terms of execution of previous contracts, simply because this is a manpower hungry business. You have a lot of people that are employed to do work on the ground in terms of execution and implementation, and that did suffer a little bit because of COVID and COVID shutdowns across the country. But we have won a number of orders over the last 9 months. Our engineering order book at the end of Q3, now this is a December ending number, so it is a few months ago, was in excess of 1,800 crores for both the combined businesses. A substantial growth year on year, any metric that you cut for Triveni. So we're seeing, and that will translate again into revenues because the time horizon is still very much the same. So it's exciting times. And I think that as we fully come out of COVID and we fully see other industries seeking products like for our power transmission products, or we see that municipalities and state governments and of course the central government invest further into water, wastewater treatment facilities across the nation, Triveni will stand to benefit.
Sorry, before we wrap up, what is that execution period that you spoke about? You said it remains the same, but what is it? Is it how many months?
So typically for our water business, the execution period is approximately 2 years. So it's about 24, ranging from 24 to 30 months. And as far as our power transmission business is concerned, it's 9 months. So, we're seeing the growth in order booking happening, but the execution time for those orders are still very much as what they were earlier, which is encouraging. So it's not longer term longer duration orders. We're seeing it for the immediate future.
Okay. Tarun, have I missed out on anything in terms of something else that is happening on the development side before we wrap up? Because I'm sure there's just so much happening in your space that it's difficult to keep track of everything. But has something really interesting happened?
So, Neeraj, I think we've really covered it. The most exciting points were the recent comments that Minister Gadkari made, which is hugely encouraging to the ethanol industry and to the ethanol sector. And I think on the back of that, we will see continued development. I think the points to look out for are on the deployment side. So how many ethanol pumps are coming up? What is the latest in terms of flex fuel technology within India, the deployment of that? Where are we in terms of changing the rubber parts in the engine so that we can look at 15% ethanol blending and then beyond? Those are the important bellwether targets that we will need to focus on in the next 12 to 18 months, Neeraj. And that, again, all working hand in hand will lead us very seamlessly to a 20% target, maybe beyond.
Maybe beyond. Well, 4,000 certainly beyond, but let's wait and watch. But Tarun, great talking to you. Thank you so much for your wisdom, and look forward to talk to you, of course, once your quarterly numbers are over.
Thanks, Neeraj.
The pleasure is ours. Viewers, thanks for tuning in.